The stock of the day is brought to you by IG, Australia's #1 CFD provider. Trade over 17,000 markets with extended trading hours on key US shares and competitive spreads, all on an award-winning platform. Get started at IG.com.
And for our stock of the day, we're actually going to look at the sector. It is gold, given what has happened over the past 24 hours. Precious metals, gold, silver, mining industry. Moreover, gold prices suffering their steepest fall in 12 years as investors took profits after expectations of US rate cuts and sustained safe haven demand drove the metal to a record high in the previous session. Spot gold falling more than 6% to around $4,110 an ounce. It did hit a record of $4,381 in the earlier session, having gained about 60% this year, bolstered by geopolitical and economic uncertainty, rate cut bets, and sustained central bank buying. Just taking a look at analysts at Citi expecting the gold prices to consolidate over the next few weeks on the likelihood of an end to the US government shutdown, as well as the US-China trade deal. And elsewhere among the precious metals, spot silver, it dropped more than 7.5% to $48 an ounce, while platinum and palladium also tumbled more than 5%. So let's start with a view on gold itself. With a look at the chart, Michael, what are you seeing?
Clearly it's, we're seeing selling in the short term. That might continue in the short term, but I stress it's for the short term. So why is gold coming off in the short term? Well, I mean, ultimately, it feels like it's done a lot in the past few days. We've seen pictures of people lining up at Martin Place. That's about it, really. The bullish reasons for gold remain. So you've got a US dollar that will continue to weaken longer term, more and more US debt. You have central banks purchasing more and more gold. So these are, we could see the stats for this. This is really happening. Even in the past few weeks, we've seen China playing silly buggers with BHP's iron ore shipments, not wanting to accept US dollars. So there's clearly movement into the purchase of gold. It's just done a little bit too much in the short term. So whenever you see these sort of big movements happen, since if we have a look going back, what's that last sort of 50, 60 years, what I've done is I've got a really long-term chart here of gold. I've put it on a log scale because, as you mentioned, okay, gold drops $100. Wow, that's the biggest move we've seen in a while. Well, you go back 20 years, that was equivalent to $10. So you need to put it in a log scale so relative, we could see. Right. Yeah, it's all relative. So what we've done is we've basically compressed the chart to reflect those percentage movements. Far left-hand side, we could see the massive run-up in the 70s when the US went off the gold standard. We could see the massive run-up in the middle there that I've circled around the time of the Asian financial crisis and the tech wreck. And then on the far right-hand side, we have pretty much where we are since gold did its breakout in March last year. So I think we're still halfway.
Based on that, you're fairly confident then that this has more to run, given on what we saw in those previous two bull cycles.
Yeah. And I mean, it looks pretty crude to say, okay, well, let's only compare it to those previous cycles. But we just haven't seen the really big moves happen. And as Sanjee mentioned at the start of the show, it's not something you want to invest in for 100 years necessarily, because as we could also see, gold will go through a long period where it does nothing. So you don't need to be there. But every now and then it'll have a run for a few years, and why not get involved? Because you can make a lot of money. So short term, it's coming back. Longer term, I think we're sort of halfway in the major move. The big drivers of gold haven't gone away. I think that the gold stocks still look very cheap longer term. They're obviously come back, I think, over the next few weeks to the next few months. There hasn't been a great deal of participation in gold stocks. Still a lot of skeptics. So we haven't seen that euphoric rise where even the gold miners who are drilling holes in the middle of nowhere are making big moves. So don't get too excited by today's downward move. It's not that big a move, to be honest. I mean, CSL moved 15% just several weeks ago. So
Well, I mean, we just wiped out last week's gains, essentially.
Yeah, essentially. So, I mean, we run trailing stops and all these things. Obviously, we've been invested in gold, in silver, in rare earths. We've now exited, but I'd be looking to get back in at some point.
So,
and I'd be sharing that with the viewers.
Okay. So,
I'll let you know.
If you were to put a call on the sector, would it be a hold then for you?
It's a short-term sell, but long-term hold.
All right. Okay. Sanjee, now I know that you don't invest in gold, so you come up with an alternative here. Given what we're seeing in resources, we know how hard some of those underlying commodities have been running. What's your stock pick?
Well, I mean, as I said, we don't look at gold. We don't look at the commodities. It's too volatile, and especially direct investment into the commodity. As Michael said, there's lines of people trying to buy gold bullion now and gold bars and things like that, which is funny because usually we buy something and we look for capital appreciation and potentially we'll get some dividends along the way as well if it's growing. Now, what do you do when you buy maybe a half a kilo of gold or something? You then go to the bank and open up a safety deposit box, which you then pay the rent for. So instead of earning a dividend, you're now paying to store it. So these kind of things, it's costing you money the longer you hold these type of things. But there's alternative ways of holding it. But even then, even if it's an ETF or something like that, they've also got costs and expenses that come out of that as well.
Well, we've given it away. We better get to it then, because Mater Group is sitting up there. So why are you picking this?
I'll get to that. So rather than I thought we'd go with a mining a services company that has exposure to mining. Mater is a fantastic business. I mean, it's only had about 6 years of listed history, but it's had a strong return on equity, consistent over those 6 years, 27% growth. But that's something that I reckon would do well throughout any of these commodity movements as well.
All right, so have you got a buy on that?
Yeah, it's a buy on Mater.
Wow, we come up with a buy. Mind you, it was your pick.
Yeah.
Well done, Sanjee. That is, our take on Stock of the Day.
The Stock of the Day was brought to you by IG. Trade over 12,000 shares and ETFs, including major tech giants with extended hours on an award-winning platform. Get started at ig.com.